Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be reviewing the week ahead. So Marios, let's begin with the United States, which has sadly become the epicenter of the COVID-19 pandemic. Now, next week on Thursday, we'll get the most important releases, the initial jobless claims, as well as the University of Michigan Consumer Sentiment Index for April. What should we expect to see there, and how will all this affect the US dollar?
Hello, Maria. Well, I'd argue that we're likely to see more disappointing data. So the reason initial jobless claims and consumer sentiment indices are the most important data is because they're the most up-to-date data. Now, I think we're likely to see more disappointing numbers. The real question, however, is, will that matter for the dollar? And I think the answer to that is no. The dollar has been trading mainly like a safe haven in the middle of all this chaos. So if we do get more disappointing numbers and that causes stock markets to drop and a risk aversion to come back into play, that could paradoxically even support the dollar. In fact, we saw this this week. Initial jobless claims clocked in at 6.5 million, very disappointing number, and yet the dollar managed to gain after that release, which shows you that when the going gets tough, fear-related dollar buying can overshadow everything else. So I would argue that the outlook for the dollar is still relatively positive, and for the markets to become more optimistic and for that to change, I think that traders would need to see two things. First, a clear timeline for when all of these economies will be reopened. And secondly, a peak in virus cases in the US. And I think we are far from that point. And therefore, I think that we could see more dollar strength ahead.
Okay, turning now to Australia. The RBA will meet this coming Tuesday. Is it likely to take any action, given that 2 weeks ago it cut rates and launched its first ever quantitative easing program? And how might the bank's action or lack of action affect the Australian dollar?
Well, indeed, we saw them take extraordinary actions in recent weeks. So they cut rates almost to zero, and they made it very clear that they have no appetite for cutting them any further, going into negative territory. So the real question right now is, are they going to expand their QE program or are they going to do nothing? And I'm in the camp that says they're going to do nothing for now. They've already done a lot, and they've almost expended all of their policy ammunition. So I think that the final bullets that they have left, they will prefer to save for, in case the situation becomes even worse. Now, as far as the Aussie, we could see it tick up a little if the RBA indeed does nothing next week, but I would argue that the overall outlook is still negative. So the overall market environment is still characterized by risk aversion, commodity prices are depressed, and global trade is collapsing, and all of this argues for a weaker Australian dollar, or at least for any rallies in the Aussie to be limited.
Okay, and finally, over in Canada, the Bank of Canada slashed interest rates to almost zero last week and also launched its own quantitative easing program. Now, this coming Friday, jobs data for March will be released. Do you think this data is likely to shake the loonie?
No, I don't. And the reason is that this data was collected in the second week of March. So that was before the economy went to lockdown, before we got widespread reports of job losses. So we might see some weakness in this data, but it will really understate the true damage. So I think that the loonie instead will focus on oil prices. So the correlation between the oil price and the loonie has jumped lately, and the oil market became a whole lot more interesting this week. So yesterday, President Trump tweeted that Russia and Saudi Arabia will cut their production by 10 to 15 million barrels to support the oil price. Now, that helped oil prices rebound, but I'm very skeptical about how healthy and sustainable this rally is. So it seems that Saudi Arabia is willing to cut, but it's only willing to cut if other nations beyond Russia and OPEC also join in. So nations like Brazil, Mexico, and so on. Now, this is this is a difficult thing to organize. But even assuming that everything goes well, so everyone meets, everyone decides to cut their production, I still can't imagine any cut bigger than 5 million. And 5 million, 5 million barrels out of supply will do almost nothing to balance the oil market. So many expect the demand side to take a hit of 20 to 30 million barrels. So if the producers cut, 5 or even 10 in the best of scenarios, I can't see that supporting the oil market really. And I think that markets will ultimately be disappointed by the size of this production cut.
Marius, thanks so much. And thanks for joining us at XM.com.